Okay, a very good evening, everyone. Thank you once again for joining our webinar. So today our topic will be investment strategy in Malaysia stock market by William Lau. Okay, so let's start our webinar for today. So before I start, I'm your MC. I'm Oliver Lau here, and then let's go on. Okay, so we are Phillip Capital Sdn Bhd, and allow me to introduce my company. So before we start, I just want to make a quick disclaimer. So today's presentation, we will not today's presentation is only for education purpose, and it doesn't hold any buy or selling recommendations. So if you want to know more about our services, you can also contact us. And this presentation hasn't been viewed by a security commission. Okay. Okay. So maybe just a quick check here. Uh, can you guys hear me loud and clear? If can, you can click the button yes, or no, can click the button no here. Okay, I see a few people responding here. Okay, so far I think there's no issue, so I continue with my presentation here. Okay, okay, okay. So Phillip Capital, we were previously known as Phillip Futures. So we were originally incorporated in 1995 October 7, and we are wholly owned subsidiary of Phillip Capital. Okay, so for future side, we actually a trading participant of Bursa Malaysia Derivative, and we also now a participant organization of Bursa Malaysia Security as well. So we have our license is CMSL, and this is our office throughout the country. So throughout our nationwide, we have 11 branches. You can see that we have a lot in West Malaysia. So in East Malaysia, we have also have Kuching, and we also have a newly established branch, which is Cebu and KK here. Okay, so all the while we have been our winning broker house, so we can trace back all until 2017, and then as well last year we have the we win first runner up for best overall derivative, best institutional derivative, and best retail derivative. Yeah, this is the picture here. Okay, so our coverage is quite large here. So throughout the whole world, we have offices all around, including the US, Australia, Malaysia, Singapore, and elsewhere as well. Okay, so this is our coverage for our global network. So we do have a close collaboration with each exchange, like the US, we have like the CME Group, and like US, ICE, Japan, on the Asia side, we have Japan, Stockholm, and Hang Seng, and Singapore with HGX, and nonetheless, Malaysia, we also are closely collaborating with our Bursa Malaysia as well. Okay, so we are your one-stop solution for your trading, and this is what we try to aim for our customer. Okay, so for product-wise, we do give a very wide variety of a product. So in futures, we give like index and agriculture, metal, energy, and interest. And we also do have a contract for difference, which is a very good product that can let you enter a short and have a very high leverage. And for equity that we just launched this year, we have like Bursa shares, Singapore, Hong Kong, and US. Okay, so we are your a broker of choice. So here I have a few reasons for you to consider us as your preference of broker here. So as I mentioned before, we are our winning broker, and as you know that maybe of our clients maybe will trade night market, we do provide a 24-hour broking execution support. And if you have any question regarding your trading or any advice, you can seek us for advisory service. And of course, we try our best to give our every latest market news. And product-wise, like I mentioned just now, we do have a lot. And online account opening can be also be done through for futures. Yeah. Okay. So in Phillip, we try to educate our client. So for online, we do provide a one-to-one coaching section, and like today we provide free webinars, and time to time we also give a seminar as well. So nonetheless, our account opening is also free, and you can just open account for free here. Okay. So what does it consist in the free one-to-one coaching? So normally, if you're not familiar with our product, like futures or CFD or stock, we can let you understand like what are the essential things that you should know, and some basic product knowledge sharing can be done here. Of course, if you have questions regarding our platform, you can find us as well. So we do provide platform coaching as well as the charting system. Okay, so we do have a lot of webinar from time to time. Like for this month, we have quite a lot of webinars ongoing. So for next month, if you're interested in the US market midterm elections or the Malaysia market outlook, you can actually just scan this QR code to register for our event, or maybe you can just draw a message letter. Okay, so just want to have a quick highlight here for our promotion. So as we mentioned now, we just offer this share. So we provide share trading commission as low as 0.08. So account opening now is free. So you can try to get in touch with us to open an account. So this promotion will only last until 31st of December. And of course, if you refer a client, if you open an account and you refer a client, you can stand a chance to win 100 ringgit touch and go reload here. So do scan the QR code here to get to understand more about this promotion. Okay, aside the stock promotion, we also have our Phillip Star product. So these three are very good product and very liquid. So we have our micro crude oil and micro gold and F50. So the margin for micro is actually quite low, and the commission for this is actually, I think, the lowest in the market. So if you're interested in trading futures and interested in trading like crude oil or gold, to find us, you can also scan the QR code here. Okay, so like I mentioned just now, we have a 24 hours broking service. If you have any question, you can find us through here. And this is our social media. You can find us by typing the words here, Phillip Capital Sdn Bhd, or our website here. So do visit us. We do update quite informative information from time to time. Yeah, like I mentioned just now, this is our contact. So we have branches throughout Malaysia. So if you need any branches, you can give them a call to understand more about our product as well. Okay, so to not to delay any further, I want to introduce our speaker for tonight. So our speaker, if you are frequent attendees of our webinar, you will know him William Lau. He shares frequently about the CPO and FKR market, and he has done extensive research on these two topics here. So without further ado, let's welcome William Lau. William.
Hi, thank you, Oliver. Can you see my screen, Oliver?
Yeah, I can see your screen.
Okay, thank you. So, good evening, everyone. So, thank you for joining us tonight. Before I start, just a quick disclaimer, okay? Okay. So, just a quick disclaimer. Whatever that I share tonight is only for knowledge sharing, and it's not a buy and sell call. Okay. So, if you want more personal opinions, probably you can talk to your dealers privately. Okay, or you can find me. I'm from Cochin branch as well. Okay, so this is the outline that I'm going to share today. The first one is we are going to try to understand what is window dressing, because as we all know, usually when we are approaching the end of the year, there are always opportunities there because of the window dressing. So if you are new to the stocks market, I will let you know what is window dressing. Okay, and the second one I'm going to cover is how to select stocks for the window dressing. Okay, and the third one is, as you all know, the market nowadays is super volatile, especially the US market. And how does US market affect us? Okay, and what are the things we need to take note in the US market for us to trade the Malaysian market? Okay, now the fourth one is what are the investment strategies in the last quarter? Okay, so these are the 4 items that I'm going to cover today. So first of all is to understand the window dressing. So what is a window dressing? So window dressing in short is a strategy used by the fund manager for them to have a better report card to boost their performance to close the year. Okay, so before 2020 finish on the 31st of December, usually the fund manager, they will try to select a few index related stocks for them to push it. So that the stocks will close high and they will have a very good performance on the fund that they manage. Okay, so this is called window dressing. Okay, so in short, market is generally bullish during window dressing activities. Okay, so window dressing in general, it can happen anytime between October until the end of December. Okay, it can happen mid of November, it can happen even in December itself. We don't know when, but we need to always get ready for it. Okay, and the last one is I'm going to show you here how does the KLCI index perform in 2019, 2020, 2021 during the window dressing. Okay, let's start from 2019. Okay, so if you look at this one, right? Okay, this is the KLCI index in 2019. Okay, so if you look at it, right, from 4th of December until the last day of December in 2019, index actually went up 67 points. Okay, just for this window dressing. So index is going to go up. Okay, now what happened in 2020? So in 2020, window dressing started earlier. Okay, window dressing started earlier in 2nd of November until the mid of December only. Okay, there is always window dressing. Okay, so index actually go up 242 points. Okay, go up 242 points as you can see here. Okay, it go up 242 points. Now, last year, 2021, what happened? Index went up 93 points from the 15th of December until 31st of December. So if you see the index is still slow, the stock market is still slow, probably in early December, don't get upset for it. Okay, don't get upset for it. Try to plan your strategy properly. Okay, so if you think you are bad in selecting stocks, okay, if you think you are bad in selecting stocks, you can try to trade the index itself. Okay, you can try to participate in the index itself so you don't have to trade the stocks. But if you think you are more comfortable with stocks, then we can do it with stocks. So there are 2 methods for you to do it. Okay, if you are familiar with our company, we are actually a futures broker, used to be a futures broker before we enter the stock broking business. Okay, so we able to guide you whichever way that you think is more comfortable. Okay, now let's move on to the second part, which is how to select stocks for this window dressing. So how can we select it? Because as I showed you just now, there are 3 years. All 3 years we see some bullishness, not like super bull, but there are a mini bull for it. Okay, so all 3 years give us a sign that there is a window dressing, and this year in particular is a bit special because the window dressing is probably going to follow by after the election. So election is like on the 19th, and we are seeing some movement in the index market already, in the stocks market. Okay, market is pretty bull at the moment. Okay, so whether the bullishness, is it going to last? I'm going to cover it later on. Okay, I'm going to cover it later on. So let's start from how to select stocks specifically for window dressing. Okay, 3 ways to do it. The first way, first of all, because we are selecting stocks for window dressing, so definitely we want to track stocks that are more related to the index. Okay, so first we need to know what are the weightage of every stocks or every sectors in the index, in the KLCI. Second, if you are not trading because index stocks are quite limited, so if we are not trading the index, the main index, the KLCI index related, then we try to pick the top 5 constituents, okay, the heaviest 5 stocks under each sectors. We can try to select in this method, in this way, okay. And the third one definitely is the easiest, which is directly we try to avoid a downtrending sectors or a downtrending stocks. Okay, now let's start from the KLCI sector breakdown. Okay, so this chart here, it shows the KLCI weightage of every sector, in the KLCI. As you can see here, banks are usually have the highest weightage. It's about 35%. Okay, so if you want to trade the index to earn a bit like 5%, 10% with a set margin, which means you want a lower risk and higher reward, that kind you can look into banks. Okay, so the second one is consumer, the third one is telco. Okay, so it depends which sectors, but try to avoid the downtrending one, like I said just now. Okay, so if you think the stocks or these sectors in general are moving in a downtrend, we can try to avoid it. Okay, now second, these are the stocks that are under the KLCI. If you don't know where to find this, it's actually in Bursa website. Okay, it's actually in Bursa website that you can just go to Bursa website and browse for it. Okay, or else you can just ask your dealer to give you the information. Okay, and the third one, okay, now move on to the second step, which is to find the top 5 constituents of each sector. This again, you can get the information from Bursa Malaysia website, and this statistic or this the stocks under the every index, okay, is dated 30th of September. So this is the latest information we can get from Bursa website. Okay, so as you can see here, I'm not sure whether all of you are aware that there is actually an index under every single sector. So if you go to Bursa website or TradingView, you just type Bursa construction index, you actually can see a construction index. Okay, so the construction index itself is actually constitutes by all the construction stocks under Bursa Malaysia, and these 5 stocks has the highest weightage. There are 48 stocks under Bursa Malaysia in the construction index. Okay, and these 5 are the heaviest one. So if the fund manager thinks that, okay, this round the window dressing, I want to push the construction index, these 5 has the highest chance for them to push in order to move out the construction index. Okay, so under construction, you can see the top is definitely Gamuda, followed by IJM, Sunway Construction, Kerjaya. Okay, under consumer, these are the stocks, Nestle, PBB. Okay, these are very big cap with low liquidity, of course. Okay, so these are the biggest cap under the consumer products, followed by energy. Okay, energy in US is very performing this round, but not Malaysia. Okay, but not Malaysia. I think probably it's because if you look at Malaysia energy stocks, right? If you look at Dialog, you look at Insen, you look at Bumi Amanda, although the price of the crude oil is very, very high, but you are not seeing some exciting earnings in these companies. Okay, there are no exciting earnings under this company, regardless very high oil price. So I guess that is one of the reasons why energy stocks in Malaysia doesn't move accordingly based on the US one. If you look at US one, because probably most of them, they are the drillers, so they really try to extract oil from the field and directly sell oil. That is why probably they are more performing than those in Malaysia. Malaysia crude oil stocks are mainly in the midstream or the downstream, not much on the upstream. Okay, other than Petronas, Hibiscus is under the upstream, but yeah, not seeing super excited earnings under this sector. Okay, and that will be financial. So like I mentioned just now, in KLCI index, financial itself is about 35%. So for me, if you reckon whichever stocks here that you think is the strongest in terms of trend, okay, so it's very easy for you to identify trend. Okay, yeah, the easiest way is just to make sure that the stocks is trading above 20 days, 50 days, and 200 days. You just try to find stocks that are trading above it for you to trade. Okay, try not to do it below, not to trade or not to participate the stocks below it. Okay, this is the easiest way if you are new to the market for you to identify trend, the easiest one. Okay, next let's look at healthcare. Okay, if you look at healthcare, IHH last year, if you remember clearly last year, IHH, I think during window dressing has been pushed out like more than 10%, if I don't remember it wrongly. Okay, IHH actually gonna push last year for the window dressing activities. So when fund manager they try to push, right, they usually will try to find the very, the in Mandarin we call the mengu, like the less retailers one. I think it's easier for them to push lah. Okay, so for stocks like So for stocks like like Genting Malaysia, I think it's harder because it's a favorite for a lot of retailers. So I think it's not easy for them to push, and they don't want people to get out of it, because if they push suddenly 15%, I think many people is going to take profit. Okay, so I think it really depends. Okay, next let's look at industrial products. Okay, so under industrial, Petronas Chemical, I think this is also one of a lot of fund managers' favorite, because I have monitored it for a few years. Okay, Petronas Chemical fund manager, they will usually push it for the window dressing. Okay, and followed by Press Metal, Hubsan, Sunwear, and Suntex. So these are the big caps. Some people might think that they are boring, but if you buy at the right price, of course, this kind of company, they can give you a lower risk and maybe a better return over a long run. Huh? But today, our focus is just to earn that 10% or maybe just for that window dressing. How do we participate in the window dressing? Okay. Next, let's move on to the plantation. Okay, so for plantation, we have Sdn Bhd Plantation. This is the biggest. This is actually the biggest plantation companies by planting acre in Malaysia. Okay, so they are actually very big, followed by IOI, KLK, Patukawan, and United Plantation. Okay, so for property, we have IOI, UOA, Sdn Bhd, and Tropicana. Okay, property sectors, I think this year is one of the worst performing sectors. Okay, if not mistaken, it's one of the worst performing. So especially SP Setia recently has dropped a lot due to right issue. I think they are doing right issue, so the share price actually dropped a lot. Okay, so this is a sectors that I personally will avoid. Okay, definitely will avoid this one. Okay, next will be real estate investment trust. In short, this is REITs. Okay, these REITs I personally think at the moment has that very good risk to reward if you don't mind waiting it. Okay, if you don't mind waiting it, I will talk a bit more later on about this sector. Okay, but the biggest weightage is definitely KLCC, followed by IGB, Sunry, Pavilion. Okay, these are mainly all the retail REIT. Okay, all the retail REIT. And lastly is technology. So technology, the biggest one is Inari, Bitrox, MYEG, MPI, and DNO. So these sectors later on I will cover a little bit as well. And last one will be telco. Okay, so these are the stocks for telco. And transport and utilities. I think this transport probably the liquidity is not that high. So when you try to select, you may try to select stocks that you are more comfortable, because these are just the top five. Okay, the top five. Okay, now let's move on to the next step, the third one, which is to avoid downtrending sectors and stocks. Okay, so if you look at these particular tables, right? You look at these particular tables, you can see that consumer year to date down about 5%. 1 year return is down by 10%. Okay, so if you look through all the entire chart from we start from year to date, there is only one sector that is with a positive return of 2.29%, which is the banking stocks. Okay, so obviously, if you just look at these particular tables, right, you know that in Malaysia 2022, all the money is actually flowing into the financial sectors, only flow to these sectors. Okay, so you know that if I want to trade, I should follow where the money is. Okay, I should follow where the money is. So if I want to participate the window dressing, I will probably pick this sector still. Okay, because it is the strongest one. Okay, so rule number one is to always select the strongest sectors to participate. Okay, so rule number two is to select sectors, index, and stocks where the share price is trading above 20 days, 50 days, 200 days. So this is the easiest way for people to identify whether the share price is on an uptrend or on a downtrend for every single person. I think this is rule number one. Okay, so these are the things that I personally will pay attention. So when you try to select sectors, right, you don't need to go through the whole thing. So if you look at this, you try to select two of the, maybe one or two, you can do your own homework, pick one or two sectors that you reckon has the highest chance for the stocks to run during the window dressing. Okay, so you try to select, of course, you try to avoid all these minus super like property over 10%, all this you can try to avoid. So you select sectors that is strongest, rule number one. Second, you go into the stocks under the sectors. So you can first of all look at the 5 stocks that I mentioned just now, see whether the 5 stocks, any of the 5 stocks meets your criteria to buy for the chart, for technical analysis, whether they meet for the fundamental, whether they meet your own personal criteria. If the 5 stocks do not meet your criteria, you can go beyond that. Okay, you can go beyond that yourself. Okay, but today I'm not going to cover the technical analysis, or I'm not going to cover the fundamental. Okay, if you guys want to have more section about technical on stocks or fundamental, we can arrange it for the next section. Today is mainly about picking it, how to select stocks for window dressing. Okay, so yeah, so these are the two steps that you can really just follow to follow the window dressing. Okay, now come back to the main questions here. I think this is a question for a lot of investors at the moment. Where are we now actually in this market? Is the correction done or not? Okay, is the correction done or not? And as you all know, US market, they although don't have direct correlation with Bursa Malaysia, but the sentiment is there. Okay, a very, very bad sentiment is in US will make Malaysia sentiment very weak as well. Okay, so today I'm going to cover actually this method here. You can use it to identify where are we now at the correction. Okay, so three ways actually. The first one, we're going to judge the phase using the 2 years treasury yield. Okay, the second one, we look at the US dollar. Okay, we look at the US dollar. So the third one is the rebound. As you all know, if you look at US indexes at the moment, right, it's actually not bad. Okay, it's rebounding. So is the rebound sustainable? This is a very big question mark for a lot of people. And the last one, how to identify the best buying opportunity. So today I'm not going to teach you how to buy with a very specific method, like a very, I'm going to give you the easiest method for every people. Okay, now start off with identify with 2 years treasury yield. Okay, let's start off with this one. So if you look at this chart, right, I'm not sure whether you guys are familiar with all these things. Okay, treasury yield, dollar index, because like I said, we are a futures broker house, right? We are a futures, we start off as a futures broker house. So we actually do offer dollar index futures. We do offer US index futures. We do offer treasury yield. Our clients do trade all of these. So these are all the things that that will help you to trade the Malaysian market. Okay, although you don't trade them, but it's very, very important for you to look at them. Okay, because our economy, the direction of the stocks market is actually affected by all these things. Okay, you need to look at all these things in order for you to judge where are we now. If you just look at the stocks, the chart, you won't know which phase are we now in the correction. Okay, so all these things are very, very interesting. Okay, are very interesting. So that is what I always tell my client. Even if you don't trade, you should open a futures account. You should open a futures account not to trade, but to monitor all the products. Okay, if you don't see them, you are not familiar with the economy. You won't feel the economy. But if you see all these products that I just mentioned, you can really feel the economy. Okay, so let's start off with the 2 years treasury yield. Okay, so this is a 2 years treasury yield monthly chart. Okay, so I drag it back to 2008. Okay, so if you look at 2008, right, you look at this chart. This is 2008, 2007. Okay, so what happened in 2007 or 2008? When the 2 years treasury yield is at this level is at 5%, 5.25%. What happened? That time, US interest rate is at 5.25%. So yield is the best thing for us to judge, because the 2 years yield, why we look at 2 years? There are 2 years, 5 years, and 10 years. But why do I look at 2 years? Because 2 years, it tells us in the short term where the interest rate is going to reach. Okay, if you look at the 2 years, 5 years, and 10 years, right? 2 years actually has the highest yield at the moment. Okay, yield, if you are not familiar with what is the yield is like an interest coupon rate or interest of a bond. Okay, so if the 2 years yield, the short term, the yield is very, very high, is at 5%, it tells you that this could possibility for the US to increase the interest rate until that level. Okay, so it's at 4.5% now. So it means that it's very, very likely this round in November, next month, okay, next month in November, US will raise their interest rate to 4.25 or 4.5. It's going to reach this level because what? Not I tell you, okay, because the yield tell you. Okay, so if we reach that level, 4.5 or 4.25, and what is next after that? Okay, so if you look at this particular area, what is next after that? This could possibility be the peak already. Okay, so in short, November, if the Fed raise the interest rate one time, then it's very, very possible there is only one last time for the interest rate to increase. Okay, so in short, likely, very, very likely, there are only 2 more times of the interest rate increase. This is how do you get this information? Is by looking at this chart only. Okay, because here is a very big resistance already. In 208, this is the peak. Okay, so very likely there is only 2 more increase. Okay, 2 more hike, quite likely. Okay, 2 more hike. So after that, what is next? Okay, so after that, what is next? As long as this thing reach a peak, I believe the index will slow down a bit, or I mean the correction will slow down or will ease lah. Huh? Okay, so 2 years treasury yield is the best benchmark to judge the peak of interest rate. So we know if this thing already reached here, then we know the interest rate is about there lah. You know. Okay, so as long as the 2 years treasury yield is between 4.5% to 5%, okay, as long as it enters this purple or the pink area, the Fed is likely starting to slow down its monetary tightening policy. But we are not seeing it entering this zone yet. Okay, if we see enter this zone, then it's a sign that the Fed is going to start to slow down the monetary tightening policy. Okay, so if the Fed starts to slow down the monetary tightening policy, what does it mean for the stock market? Okay, I think you will get the answer yourself. Okay, now second, we judge the status of the correction at the moment using US dollar. Okay, so why US dollar plays such an important role? Why? Because US dollar, right, at the moment, the Fed is increasing the interest rate, and US dollar is like, I think it's like in Mandarin again. I use Mandarin word. It's like 割韭菜 for all the other currencies. Okay, the yen, the pound, Malaysia dollar. You know, it's like they really kill every other currencies just because they raise the interest rate to like 5% back in 2008, and the all the currency is like weakening like, you know, like crazy. Okay, so this is a sign. So when US dollar, right, cannot go up anymore, it's a sign that the interest rate hike might reach a peak. Okay, this is a sign. So we judge the strength of US dollar to identify whether the US is going to continue to increase the interest rate. Okay, if the dollar start to weaken or start to consolidate a very high ground, then it's a sign that probably interest rate is max already. US is going to either stay there, okay, or start to decrease. So when it start to decrease, you know what to do next. Okay, you can try to long gold. Okay, gold usually reflect earlier. Okay, when gold start to go up, it's a sign that US is going to start to decrease the interest rate. Okay, you see, gold, dollar, and the yield. How do they correlate? They are very, very close correlation. Okay, so if you look at this chart, right? If you look at this particular chart, I'm not going to touch into gold because tonight I'm not talking about gold. Okay, so if you look at this chart, what kind of chart pattern does it form now? Okay, I prepared this actually just 1 or 2 days ago. Okay, so if you look at this chart, this is actually a triple top already. Okay, this is a triple top, and you can try to go and look at the dollar index right now. If you have a handphone, you just type DXY in your trading view. Okay, you can see where is the dollar price right now. Okay, has it break this support? The answer is yes. The dollar, I think it breaks until 110. And what is the effect on the US indexes when it break this support? The effect is last night. Is the US indexes bull last night? Okay, so these are all the correlation that you can look at. Okay, so if you look at, and the second thing that you can look at here is that if you look at the purple, this small cycle that I put, right, these are all the interest rate increase. So on the March, okay, increase from 0.25 to 5. Okay, dollar start to go up. Okay, start to strengthen. In May, increase from 0.5 to 1%. Dollar continue go up. Okay, now in June, interest increased from 1% to 1.75. Dollar continue to go up. Okay, in July, 1.75 to 2.5. Dollar continue to go up. Now, this is a what? This is a behavior. Every time interest rate starts to increase, right? The dollar will keep strengthen and strengthen and strengthen. Okay, so we are now here. This is last month. Okay, this was last month. Increase from 2.5 to 3.25. Immediately, dollar go up. Okay, so now this is a behavior. Okay, we know this is a behavior. Okay, every time increase, dollar go up. Now, if suddenly we see interest rate increase, okay, but dollar do not go up anymore. You see, if you look at here, right, the correction is like how many? 2 weeks. Okay, 2 weeks here, also about 2 weeks here, also about 2 to 3 weeks. So after we see the next hike of the interest, right, maybe from 3.25 to maybe 4%, okay, maybe to 4%, maybe to 4.25%, we don't know. Okay, we don't know. So if we see dollar stop going up after 2 to 3 weeks, right, after the interest rate announcement, if dollar do not go up in 2 to 3 weeks, it is a reversal. Okay, it is a signal for US dollar to reverse downwards. So what does it means for the Fed decision if the dollar's index start to go down? Okay, it means that probably the height is there already. Maximum, like I said, another 1 or another 2 is the max already. Okay, it's the max already. So that will give investors maybe, you know, some bullishness lah. Not saying like bull market, big bull, but at least the correction is there. Okay, the correction or the you know, all these things, the tension will ease down a bit lah. Huh? Okay, so it's a sign. So just monitor one thing here to conclude the whole thing. Okay, is that you wait for interest rate announcement in 2 to 3 weeks. If the dollar do not keep going up, it's a sign that we are almost at the peak. Okay, it's a sign. So just wait for that behavior, because like I said, since March, the behavior is that always go up. Okay, so once this behavior don't happen in 2 to 3 weeks, then probably it's a sign that poof, you know, dollar is reaching a peak. Okay, so dollar index actually form a triple top. Is a signal as a temporary peak of the dollar index. Okay, so this after a minor correction, so for me, I don't expect dollar to collapse immediately. Okay, I don't expect. Okay, I think after a correction, it can still go up. Okay, I think it can still go up. So just whether how serious is the correction, for me, I think it won't correct too much lah. It's still going to go up because we are only at 3.25. Okay, like I said just now, the chart I show you here, we are expecting this kind of level, 5.25. So we still have 2% there. Okay, so don't expect big bull lah. Huh? A lot of people, they say, oh, index down 20%, 30%. Oh, rock bottom. You go and bottom fish it. Then probably you look at China index down 30%. You think rock bottom, they kill you one more round. Okay, so try to understand what happens to the macro for you to judge whether where are we now. Okay, so you see, I use the word temporary. Okay, so the temporary peak, I don't say US dollar peak already. I only use temporary because I think this could be temporary. Okay, so the temporary peak, right, allows US stocks, US market to rebound. Okay, after being oversold. Okay, it allows US stocks to rebound. Now this comes to our third question here. Is the rebound on the S&P going to be sustainable? Is it sustainable? Okay, so what is sustainable? Sustainable means reverse from a downtrend. You can see here, this is obviously a downtrend, keep lower low, okay? So reverse from a downtrend to an uptrend, okay? So is the rebound at the moment sustainable? First of all, if you look at the 2 years view that I shared you just now, first, it haven't entered into that the pink color, or the what color is that? The pink color, yeah, the pink color area. Okay, first, it haven't entered that. Okay, so there are still room to go up. Second, if you look at the dollar index, for me, that is a temporary peak only, which means after a correction, it's very, very likely for it to continue to go up. Okay, as long as these two things continue to go up, it's very, very hard for index or the stocks market to reverse. Okay, so reverse means from downtrend to uptrend. Okay, it's very hard for it to reverse. Okay, so now come back to US index. Why am I expecting a reverse here? Why? Okay, if you look at the historical correction, right, this is the entire correction since January 2020. Okay, this is from January, right? If you look at this, I like to find behavior in a particular products, be it stocks, be it indexes, be it commodities. Okay, this is the very interesting thing for you to learn. Okay, because I think the accuracy is always there. It's the behavior. Okay, so first of all, what behavior do we see in the S&P 500 over the entire year? Okay, we talk about behavior, right? You see, from here to here, this one, the correction is how many days? 77 days before a bigger rebound. This one, I don't count it, because this one is very, very small. Okay, the percentage is very, very small. But this one, the percentage is bigger. So I count the bigger wave. So 77 days, 79 days from the peak, correct, until the rock bottom before a bigger one. This one I don't count because the momentum is too weak. So I don't count it. So 79 days. Now, after a correction, after a rebound, now how many days? If you look at this, right, until this particular candles here, this is 62 days. Okay, this is the final big candle. And this one, if you look at my, I'm not sure whether you guys can see it. I hope you can read. So if you look at on the 13th of October, what happened? On the 13th of October, which is this particular candle, what happened to the stocks market in the US? Okay, US actually announced a very, very high CPI, higher than expected, higher than analysts expected. Okay, S&P actually, if you go into a smaller time frame, of if you remember on the 13th of October, because why I remember so clearly, because that is the day that if you join our soy oil and palm oil event, right, that is the day that actually announced it, and we are still talking with clients. Oh, everybody tell us, wow, the CPI is very, very high, the stocks market collapsed. But after 1 to 2 hours, the whole thing rebound. Okay, so this candle is very, very important for us to trade the stocks market, even if you are trading in the Malaysia stock market. Okay, why? Because as long as the index go below this, right, means there are more bearishness to come. As long as it holds above it, it means that probably you will see a rebound. So you need to look at this for you to trade even the Malaysia stock market. Okay, so if you look at this, right, 62 days is until 13, and what are we now? We are now, it's like how many days? We are now, it's like 35th, 26. We are 26. So you need to add another 7 or 8 days. That brings us to about 70 days. Okay, so if you look at the past, right, 77, 79, we are now, the correction is about like 70 days. Definitely, we are going to see a rebound. So if you want to trade the stocks, this is the time. You find stocks that you think the technical analysis that meets your personal criteria to trade, you can trade the stocks now. Okay, before it's too late. Okay, once this index reach this is 200 days, by the way, the purple line. Once the index reach the 200 days, probably try not to trade the stocks anymore. You know, if you are trading the stocks, this is the time. If you are, or else sometimes people experience bullishness for 1 week, 2 weeks, you try to enter, then probably you are entering at the wall. Why? Because index is already reaching that resistance, it's too late. It's too late. But now it's not too late. If you ask me, it's not too late. Okay, so you judge from behavior. Yes, we are expecting a rebound, and this particular candle is the best signal for you to enter. Coupled with all this behavior, 77, 79, we are now at 70. Okay, so based on historical correction, okay, in 2022, S&P 500 would last around 70 days before a rebound, and we are there already. Definitely, we are seeing a rebound. Okay, so Malaysia market will follow through as well. Because why? We are at that election moment, you know. Election is usually very bullish. If you look at 2013, 2018, during the election, usually it's quite bullish. Okay, so second, we are currently at the 70 days of correction, therefore possible for S&P 500 to rebound to 4100. Okay, so if you are trading the US market, US stocks or US index, yeah, now is the time. So last one, how to identify the best buying opportunity. Okay, this is the easiest method. Okay, again, I like to look into the history for you to capture the bottom right now. Okay, let's start from 2002. Okay, so 2002, what happened? So S&P 500, right? It dropped 23. So first thing, I read this thing first before I explain my chart. So if we happen to see US index to drop more than 20% in a single month, okay, in a single month, okay, the rock bottom should not be too far away. Okay, it's a sign of extreme fear. Imagine indexes drop 20% in 1 month. 1 month means what? From the 1st of October until the 31st of October. That is 1 month. Okay. Within 1 month, indexes plunge more than 20%. Will you, if for normal retailers, I think 80% of the retailers, they basically cut everything. They basically cut every position they have because of what? Extreme fear. And usually bottom is usually not far away from extreme fear. Okay, so just wait for that extreme fear to appear. I'm not seeing that extreme fear yet. Okay, I'm not seeing that extreme fear yet. At the moment, they are just fear, not extreme. I want to wait for that extreme. If you see extreme, definitely it's the chance already. Okay, open your stocks account, buy whatever stocks that you like. Okay, your chances to win are high. Okay, now back in July. Okay, now I'm going back to explain my chart here. In July 2002, right? S&P actually dropped 23% in a single month before reaching a bottom. Okay, so if you see this particular candle is 23%, 23% drop in one single month. This is a monthly chart. Okay, so if you don't believe, you can try to go to your trading view, turn your chart into a monthly chart. You can go and measure every single candles that you think is big, whether all these candle has that 20%. Okay, you can go and measure it yourself. As long as don't have 20% doesn't meet the criteria. You wait for that 20%. So 20%, you can just buy already because the bottom is not far. Because of what? Extreme fear. Like I said, that is extreme fear. Now, in 2008, index actually dropped 29% in single month before reaching a bottom. So this particular candles here is extreme fear. Because what? You look at all these candles, it's actually not that big, you know. It's like 温水煮青蛙. They try to really sting you, like let you wait impatient, and then you start to buy because you think it's bottom, but end up this candle probably you cut everything again. Okay, so this is extreme fear. So like I said, I buy at 20% because I don't know where is the bottom. But if I buy at 20%, maybe the bottom is only there another extra 1 to 20%. Okay, because what? Extreme fear happens already. Okay, so you just try to buy stocks that you want if you see extreme fear. Okay, now this is COVID. Oh, sorry, this one should be 2020. I didn't edit it. Okay, this should be March 2020. Okay, S&P dropped 31% in single month before reaching a bottom. If you look at this particular big red candle that I highlight here, right? This particular candle from high to low is 31%. Okay, before a super rally that we see in after the COVID, after April 2020, that super rally is that 20% here. We won't be able, like I said, we won't be able to catch the rock bottom. But if you buy at 20%, right, your bottom is only that 10% left already. Okay, so always try to wait for the extreme fear if you want to accumulate very, very big position. Okay, so this is the easiest way for you to identify the buying opportunity. Okay, now just a very quick one. Investment strategy in the last quarter. Okay, so what to invest in Q4? So I list out 4 sectors that I personally think is better to participate in the window dressing. Like I said, now I'm expecting a rebound. Okay, how high can the stocks rebound? You can always go back to the US market. Okay, if US market reach a peak, then probably the whole thing is going to slap down again. Okay, so first of all, I like finance index because what? Financial stocks, because this is the sectors that is strongest this year. Okay, they are also very likely to benefit from the window dressing activities. Okay, because of their significant components in the KLCI index. Okay, so you try to select banks that or stocks, banking stocks that is above the easiest way, 20, 50, 200. Okay, next will be tourism. Okay, so for this one, be it from the fundamental perspective or from technical perspective, I think they are all not too bad. Okay, Genting Malaysia, if you look at a bigger channel, you don't go into daily chart. Daily chart, of course, is in a downtrend. Okay, but if you look at weekly or monthly chart, they are actually still in very big consolidation. Okay, so it's not so bad. Okay, it's not so bad, but of course, yeah, there are possibility to benefit also because these three stocks are quite heavy on the index as well. Okay, so yeah, next I will talk about a bit about REITs. Okay, so REITs in general, they really underperformed since March 2020. I think REITs just is still at almost at the low of March 2020. Okay, if you ask me why, I think it's because of the high interest rate. Okay, so high interest rate is usually not so beneficial for REITs because what are the people that usually will invest in REITs? People that want to collect dividend. Okay, and our interest rate, our fixed deposit rate is like running at 3.5%. I'm even seeing banking giving out 3.5% interest for fixed D for 12 months, you know. So 3.5%, this is like risk-free, no risk on the capital versus REITs. You put in REITs with capital volatility, okay, there's no guarantee on your capital, and you are also earning an interest of about 3.5 to 4%, average 4% or 4-ish a bit. So people will probably pick to put their money in the bank lah, huh? If you want that interest only. Okay, so if you ask me, because of the high interest rate, probably is not so beneficial for REITs. However, okay, if we look beyond that 12 months, okay, interest rate will not forever stay at this level. Okay, interest rate will not forever stay at this level. Okay, so at this kind of level, it provides an opportunity for investors to buy into very low risk and high reward asset in the long run. So what is long run? You need to look beyond 12 months. Okay, so when you try to pick REITs, right, try to focus on dividend, very consistent dividend payout with consistent rental collection REITs. Okay, like Sun REITs, IGB REITs, you know, the mall is always consistent, you know, the crowd is always consistent, the occupancy rate is always consistent. Okay, and they always consistently pay out the same amount of dividend. Okay, so when the price keep going lower and lower, means your return getting higher and higher based on the dividend they pay out. So this is the time that you try to buy this kind of asset and put there for a longer run. Definitely you will win the fixed deposit. Okay, so this is a very low risk, high reward setup in my own opinion. Okay, now the last one is technology. A lot of people, they like it. Okay, I also like it, but just not this year. Okay, I think it's unlikely to recover in the last quarter due to very flat and not interesting earnings. Okay, a few news that if you see, one is it flat. Okay, iPhone sales in China is down 11% this year. Okay, iPhone 14. Okay, Elon Musk, he said that. Okay, the demand of Tesla is a little harder. Okay, during the earnings announcement, Elon Musk said the demand is a little bit harder. Okay, so they try to reduce the selling price in China. Okay, why a car needs to reduce selling price of a car by 5 to 10%? Because the sales is back in China. You know, the sales is back in China. So the last one, if you look at the news, the Meta, the Google, the Amazon, the Microsoft, the Salesforce, you know, all these big giant tech, they are actually freezing all the hiring. Okay, these are signs. These are all the news. Also, Salesforce freeze it, Amazon freeze it, Microsoft freeze it, TikTok, JP Morgan, they are all freezing hirings. You know, iPhone 14 sales is bad. You know, China sales for Tesla is bad. So they are trying to cut the price. So these are all the things that are very bearish on technology. Okay, some people will say, hey, it's cheap now, try to buy. I think these kind of people, they actually start saying it 3 months ago. But what is the price now? So try to wait for the extreme fear if you are aiming the technology. Okay, if you see that extreme fear that I shared earlier, yeah, go for your technology. Okay, go for your technology. Whatever technology that you like, yeah, wait for that extreme fear to happen. I think it's going to happen. Okay, so basically that is all I want to share today. Okay, basically that is all I want to share today. And again, just a quick shout out about oh, hey, sorry, I think I forgot to change the title here. Okay, trade shares online and only 0.08%, not 0.3. Okay, this is wrong. Okay, at 0.08% only. Okay, so actually at the moment our company has this campaign that you can trade US, you can trade Bursa, you can trade uh, Hong Kong, you can trade Singapore at 0.08%. Okay, we give a flat rate. So if you want to trade, you can ask your dealer. Okay, you can ask your dealer. Okay, and next is you remember that I share about gold, I share about US indexes. If you want to trade, yeah, we offer that. Okay, so now time for Q&A. Yeah, for now time for Q&A. Oliver.
Okay, William. So we have a question here is from Leong Choi Hong. Yeah. So she was inquiring. There are three sets of export data, namely SGX, MSPEC, and Intellect. What for the actual export figures? Do we need to sum them up? SGX and MSPEC, Intellect are the same part.
Okay, Mr. Leong, I think you are asking me about the palm oil export data, right? Okay, sorry if you are not familiar to palm oil, but still I will try to answer this question, but it's not related to stock, yeah? I just say first, SGS and SPEC and Intellect, they are export surveyor for palm oil. Okay, export surveyor for palm oil. No, you don't need to add them up. They are separate entity. So how you read the export data is that when you look at SGX export data, you benchmark against MPOB data. So you benchmark SGX itself versus MPOB last month, and SPEC versus MPOB last month, and Intellect, in short, ITS, okay, versus MPOB last month. You don't add them up. They are separate surveyors. Okay, yeah, I hope that answers your question lah.
Okay, thank you, William. Let's move on to the next question by Mata Ling. So Mata Ling here said that why 2-year Treasury yield is the best choice to judge interest rate, and why the peak of the interest rate signal USD strength will decrease.
Okay, first of all, why 2 years is the best choice to judge the interest rate? Okay, first question here. I'll answer this question first. Because we have 2 months, we have 5 months, but these are overly short. Okay, these are overly short. But 2 years to me is to a lot of people actually, it's a very, very short-term yield. Okay, so if you look at the news, right, usually we talk about inverted yields. And the inverted, usually they will use 2 years and 10 years. So they will take 2 years versus 10 years. They call the inverted yield. If you remember clearly, I think 6 months ago, okay, 6 months ago, you will see lots of news in the market talking about inverted yield lead to a recession. So how do they calculate that inverted yield? They take 2 years minus the 10 years, which means 2 years yield is higher than 10 years. Okay, so why we look at yield, right? Why is yield so important? Now, I give you an idea, right? If you put your money in the bank for 2 years and your return is higher than 10 years, you put your money in the bank as fixed deposit for 10 years. If 2 years is higher than 10 years, do you think there is something wrong in the market, in the financial market? Why does the bank give you higher return for 2 years over 10 years? Who wants to put money in 10 years in that case, right? So there is something wrong in the market, which this is the concept behind an inverted yield. That is why the whole market will say recession is coming, because everybody is trying to lock the money, in the short term, because they expect in the short term there is a recession. Okay, so why I look at 2 years is because inverted, you want to count that inverted. Usually people look at 10 and 2, and 2 signal the short-term fund. the short-term yield. So 2 is the best thing, if you ask me, is the best thing to judge the rate, okay, over the rest of it. Now, second question, why the peak of interest signal USD strength will decrease? First of all, what causes USD to start going up? When? Go back to the chart that I mentioned just now, DXY, okay, and also the timing. I think I show my timing in my chart. If you look at the timing, right, it's in March. So it's in March that US start to increase the interest rate from 0.25. So that timing 0.25, does it in line with the strength of USD? When does US dollar index break up? When does US dollar get so strong versus all the currency? When? If you look at that, because of the interest rate hike. Okay, when interest rate increase, money tend to go back to interest to US, because you put your money in the bank, the return is better than you go and invest elsewhere. Okay, so this is a very good signal that if you look at the interest rate, if you reach a peak, usually USD will reach a peak as well. Okay.
Okay, let's move on to another question here. So we have an interesting question here from Leroy Chan. So I think Leroy was asking about how Malaysia GE general action affect Malaysian ringgit in the short term.
Okay. Malaysia general election affect ringgit Malaysia. If you ask me, ringgit Malaysia, I think do not correlate so much with election. Okay, do not correlate so much with, but more correlate to our own OPR rate, which is why you will see that the OPR also, our OPR also keep increase in order to be in line with the United States. Okay, if we don't do so, what will happen? Look at Japan. Okay, look at Japan. Japan is the best example already. You don't increase, you don't turn from dovish, you don't turn to dovish, keep increase interest rate. Okay, then it's very, very hard already. Look at Japan. Japan until today they haven't increased any percent yet. Therefore, look at the yen. Okay, keep weakening. Okay, and there are a lot of theory, a lot of stories behind yen, of course, but I'm not going to go so deep because of the time constraint as well. Okay, but yeah, to answer this question in short, I think not so related with the general election, but our own OPR. So our OPR keep increase, our export doing well. I think our MYR will be stronger a bit lah, won't weaken that seriously lah. Yeah.
Okay, let's have the last two questions. So the second last is, what is your opinion on Nasdaq? Is it the time for rebound as well? By Stephen Fu.
If you ask me, I think yes, will be in line with the rest of the indexes. They will rebound. If you ask me tonight, I think the indexes will rebound as well. Okay, so I'm not sure whether any of you here actually look at US index. Okay, so US index is actually very, very interesting. You know, we got 4 indexes, right? Nasdaq, S&P, Dow Jones, and Russell. So Russell is the 2000 small cap in the United States. If you go and look at this small cap index, right, it's performing very well. You know, it's performing very well and is one of the strongest. Just go and look at the chart today. Okay, today, go and look at the chart today. Dow Jones down like over 1% this morning. S&P down over 1% this morning. Nasdaq down 2% this morning. Go and check out Russell. Russell didn't even drop. So this is a sign that the market is there. You know, the rebound is there. You know, the bull. I won't say bullish lah, but the rebound. I won't say reversal, but I use the word rebound. You know, until that 200 points on the S&P is there. You know, the opportunity is there very likely, because usually if we say the market, the financial or the equities market is bad, usually the small cap index will not perform. Okay, the small cap index will not perform. So if the small cap index is performing, means the small cap is performing, is the signal that probably the market is not that bad. You know, at this moment it's not that bad. Yeah. So I reckon Nasdaq will go back upwards in the short term. Like a rebound, you only catch a rebound. You don't try to hold everything until, you know, like this is the bottom already. I don't think the bottom is there, but I'm expecting a 5 to 10% rebound.
Okay, thank you, William. Okay, it seems like let's move on to our last question. And it seems like our audience is very interested in foreign market here. So we have a last question here by Stephen Patrick. Is there any reason the Hang Seng could go lower?
Okay, this is a very good question. I'm not sure whether any people of you here look at Hang Seng Index, okay? A lot of people ask me, my client ask me, why Hong Kong stocks is so bad, you know? When will Hong Kong stocks reach a bottom? Again, go back to USD, okay? Go back to USD. Now, why Hong Kong stocks is doing so badly? Okay, now today, if you know that Hong Kong, right, they actually pegged their Hong Kong dollar against US, okay? I'm not sure whether all of you actually know this. Hong Kong dollar actually pegged against US dollar. So which means at this moment, if you go and check out Hong Kong dollar, right, this is the only currency in Asia that did not weaken. Okay, the level is like forever there because what? The Bank of Hong Kong, you know, the Central Bank of Hong Kong, they actually hold that Hong Kong dollar. The strength is there, you know. So if I am investors in Hong Kong, right? If I am investors in Hong Kong, I will sell whatever asset I have in Hong Kong. I use my Hong Kong dollar and I go and invest in countries that the currency has dropped over 20%. You know, so when the currency returns, right, my investment return directly from Forex, I earn that 20% already. Okay, because Hong Kong dollar is still at the same level while other Asian currency already dropped more than 20%. You know, so if I hold Hong Kong asset, definitely I'm going to dispose my Hong Kong asset and I'm going to invest elsewhere with, you know, better return. So because of this, right, because they peg US dollar against Hong Kong dollar, right, so if you want to cash out, I will definitely choose Hong Kong to cash out. You know, if I'm a fund manager, I'll definitely pick Hong Kong to cash out because, you know, Hong Kong dollar is always so high, you know, because the Central Bank of Hong Kong, they really hold it, you know, they keep buy Hong Kong dollar to hold that Forex, you know, against USD. It's always there. So I will keep selling and then I will go and invest elsewhere. So that is the one of the reasons why Hang Seng is doing so badly. Hong Kong stocks is doing so badly. So how to catch Hong Kong stocks low? Again, go back to US dollar. Okay, moment US dollar stop going up, it can be a signal for Hong Kong dollar to reach Hong Kong stocks to reach that bottom. Okay, it can be possible. Okay, because what? US dollar cannot go up already. Why do I still need to hold so much of, you know, if US dollar cannot go up, other foreign currencies, like in Asia, I focus on Asia, like Ringgit Malaysia, like Thailand dollar, like Japanese yen, probably they won't weaken already. If they won't weaken already, there is not so much incentive for people to dispose Hong Kong asset and go and invest already. So that could be a bottom for Hong Kong stocks. So again, look at US dollar. I think everything you need to look at US dollar, US stocks, you know, I think they are the cycle, they are the benchmark for everything. Okay, so yeah, look at dollar. If dollar, I think stop going up, it can be a bottom for Hong Kong stocks. I'm not sure whether my explanation is clear, but if you have more questions, you can send in email to ask me personally to explain a bit clearer for you. Yeah.
Okay, thank you, William, for the insightful sharing here. So it is past 8 already, so we will end our Q&A section here. So if there's any other further question, like William said, do not hesitate to email us or give us a call. We'll try our best to give you our answer. Yeah. Okay, so William, do you have anything else?
Yeah, I think that is all. If you want to open futures account online, like I said just now, you can open it online through this link. Okay, you can open online through this link for you to monitor all the products that we just covered just now. Okay, and again, thank you for your time. Bye bye. Have a good night.
Okay, thank you, William. Goodbye. Good night.